Hey everybody, Ijaz here, back with another video. So the data analytics company and a fan favorite Palantir have just beaten their earnings and they're now trading up 9% this morning. The analysts had an expected adjusted earnings per share of 4 cents and Palantir delivered exactly 4 cents. For revenue, they had a 352 million expected and they delivered 376 million, which is actually what analysts expected in the next quarter. So revenues were up 49% from the year earlier. They also announced that adjusted free cash flow, they're going to revise that target for the year to 300 million versus actually 150 million. So we're going to dive into their 10Q and spend a few minutes looking at that just to kind of cover off some of these figures and make sure we can see those in the numbers for ourselves. Now, we know that Palantir provide data analytics software and services to government agencies, defense departments, the FDA, the CDC, etc. But they want to increase, and we've spoken about this before, they want to increase their penetration in the commercial market. They've got Foundry, one of their software offerings, and they want more startups and more corporate companies using that, because at the moment, a lot of their revenue is reliant on government contracts. And so they've got very few contracts, and if they were to lose them, it would have a massive impact on their revenue. So we want to see this diversification. Now, just to touch upon the government contracts, we know that the US government were using COVID-19 to track vaccine production, distribution, and the admin around it. The CDC also renewed in June a $7.4 million contract to actually use Palantir software to track future potential occurrences of pandemics. And this is really going to be an interesting space for Palantir to operate in, because a lot of countries, a lot of the Western countries and the slightly more wealthier countries will be wanting to spend money on preventing this. It would have impacted their economy a lot. And if they could have just had a slight head start coming into the pandemic, it would have made the world of difference to their economy. So that could definitely be an interesting space for Palantir. So let's flick on over to their 10Q. Now, a few bits to note. So this is the first point we want to have a look at, is the revenue. So the Q2 2020 was 251 and they delivered 375 million here in the current quarter. So we can see that we're up about 50%. I think it's exactly 49%. And looking at the gross profit, that's come up nicely with it, as you would expect. And we're looking at the sales and marketing. All those lines have increased as you'd expect. Now, the good thing here is margins have improved because the net loss has tightened, which is how we've managed to beat expectations. But the more interesting thing I want to find is, we know we're still trading at a loss here with Palantir, and that's not the concern right now. The concern is making sure that the revenue and the concentration is reducing. So if we flick through to where they provide the breakdown of the revenue. Right, so this is where I wanted to spend some time on. So we can see here for Q2 2020, their breakdown was 139 in government contracts and 112 in the commercial. Okay, so so probably about 55, call it 55-45 split. Now, commercial doesn't seem to have increased a lot here, which is year over year not increased massively, but the government contracts have delivered a substantial increase, which is driving that 49% increase in revenue. Now, the contributions to gross margin are similar for both government and commercial. So that's not the interest here. It's not that they make more money from commercial or government. At the moment, it's just about reducing their reliance on the government contracts. Now, if we were to so that's a concern. I would want to see the commercial really stretching its legs a little bit more. Now, we do know that we can see here that the breakdown of the countries is also very concentrated. So we can see that of that revenue, 53% is coming from the United States. Okay, so you can see 53%, they've increased their reliance by 3% on the United States. United Kingdom, 11-12%, and France have gone down, which is good in terms of the concentration. and the rest of the world's gone up. So we want to see this diversify out. We don't want too much reliance on just the United States, and in particularly just the United States government contracts. Because if the only clients they've got are the CDC and the FDA, that's not a sustainable business model. Okay, so coming back here, we can see that they are saying that they've actually, Palantir signed 30 deals worth $5 million or more and 21 deals worth $10 million or more. So the company is saying that net, they added 20 new customers in Q2. So we know this is a very high average order value client business. And in the fourth quarter of 2020, they had 149 customers. Okay. Now, we also know they started, let's see if I can pull this up for you guys. They also started spending a lot of money investing in SPACs. Now, let's see if we can find that page here. Here we go. So we can see how much and if I just move myself out of the way, we can see how much they're now investing in SPACs. So they're not massive amounts of money. In total, it's 250 million. Oh, wait, that's a lot. It's in thousands. So they are investing a lot. 250 million they're putting into 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 SPACs, 10 different companies. Now, Kawasaki on the earnings call said these are companies that we think we will be working with for a very long time. Further, we think that using our products is going to help them win. Okay, so you can see that 250 million they've committed to. But I guess they've got confidence in their product. They see these are the companies, whether it's Lilium, Sarkos Robotics, Babylon Health, they feel these are the ones who are going to be changing their spaces, their relative industries. And they feel if they can prove that Palantir adds value to them, not only will they be great case studies, but it will help them become the clear front runner in their industries. So there you go, a strong set of earnings from our friends at Palantir, which is good. Hopefully the market starts to understand that this isn't just one of those momentum stocks which retail investors are trying to jump into, but this is a solid business. I'd want to see a bit more diversification. I'm a bit concerned with the concentration in the US and with the government contracts, but I also understand it can take time to change that culture within the business and change the branding. So there you go. That's a Palantir Q2 earnings breakdown. We'll see you in the next one.